There is a specific reason why 90% of people will never be wealthy, and it has nothing to do with their salary. It's because they treat wealth like a mystery instead of a recipe. Getting rich isn't about luck, and it isn't about grinding until you burn out. It's about a precise combination of ingredients that, when mixed correctly, make wealth an inevitability rather than a possibility. Today, we are moving past the surface-level advice. We're going deep into the 7 essential ingredients you need to build a fortune that lasts. This is the blueprint for next-level thinking. Ingredient 1. The psychology of delayed gratification. The first and most difficult ingredient is the ability to suffer now so you can live later. Most people are addicted to the micro-dopamine of a new purchase. They get a raise and immediately they buy a better car. They get a bonus and they upgrade their wardrobe. This is called lifestyle creep, and it is the silent killer of dreams. To get rich, you must develop a wealth gap, the space between what you earn and what you spend. The wider that gap, the faster you grow. You have to be willing to look unsuccessful for a few years so that you can be truly wealthy for the rest of your life. Ingredient 2. Asset acquisition over income. High income does not equal high wealth. There are doctors earning $500,000 a year who are functionally broke because they only have earned income. If they stop working, the money stops flowing. The second ingredient is a radical shift toward asset acquisition. An asset is anything that puts money in your pocket while you sleep: stocks, real estate, or automated businesses. Your goal isn't to work for money, it's to work to buy assets that work for you. Every dollar you spend on a luxury is a soldier you have sent to die. Every dollar you invest is a soldier sent to capture more territory. Ingredient 3. The multiplier of skill stacking. The market doesn't pay you for your time, it pays you for your value. If you have a common skill, you get a common wage. The third ingredient is skill stacking. You don't need to be the best in the world at one thing. You need to be in the top 10% of 3 related things. For example, a good accountant is common. An accountant who understands high-level sales and public speaking is a rare, high-value asset. When you stack skills, like finance, marketing, and leadership, you create a unique value proposition that allows you to demand 10x the average market rate. Ingredient 4. Asymmetrical risk. Most people are terrified of risk, so they stay in safe jobs that are actually risky because they have a single point of failure. The wealthy understand asymmetrical risk. This means looking for opportunities where the downside is limited and known, but the upside is infinite. Starting a side hustle has a limited downside, a few hours of time and a little capital, but the upside is $1 million exit. Keeping your money in a savings account has zero upside after inflation. You cannot save your way to a fortune. You must intelligently deploy capital into areas where the reward far outweighs the risk. Ingredient 5. The network effect. You have heard it before. Your network is your net worth, but most people get this wrong. They think networking is about taking. True networking is about positioning. You need to be in rooms where the baseline of conversation is higher than yours. If you are the smartest person in your circle is a cage. This ingredient requires you to provide value to people who are ahead of you without asking for anything in return. Access is a currency. One piece of information from the right person can save you 10 years of trial and error. Ingredient 6. Radical temperament. The stock market and the business world are designed to transfer money from the impatient to the patient. The 6th ingredient is temperament. When the economy screams, you must remain silent. When everyone is greedy, you must be cautious. Getting rich requires a level of emotional detachment from money. You have to treat your investments like a business, not a hobby. If your strategy changes every time you see a scary headline, you aren't an investor, you're a gambler. Success is found in the boring, repetitive execution of a proven plan. Ingredient 7. The architecture of time. The final, most important ingredient is time, or more accurately, compound interest. Most people quit in year 3 because they don't see the hockey stick growth yet. But wealth is back heavy. The biggest gains happen in the final 20% of the timeline. If you interrupt the compounding by being impatient or constantly changing lanes, you reset the clock to zero. You need to build an architecture of life that allows you to stay in the game for decades, not months. Getting rich isn't a flash of lightning. It's the result of these 7 ingredients working in harmony. It's the discipline to wait, the courage to stack skills, and the wisdom to buy assets. If you combine these with a long enough time horizon, wealth isn't a question of if, but when. This is the path of the few. This is next level thinking. Subscribe to master the game.